Hey folks, it's Chris Richards with the Richards Mortgage Group. Today we're going to have a quick chat on mortgage financing for Canadians in foreign countries. So if you're looking to buy a property somewhere else in the world besides Canada, what can you do for financing? Let's use a property in Mexico, an example of this conversation. I think the first part to understand, one of the places I get a lot of questions about is that the thought is that a Canadian bank will lend money on a property in Mexico or Costa Rica or United States for that matter. So I wanted to first of all explain just how property registration and land titles and real estate law works. So in Canada and most jurisdictions in the world, there is some system of land titles organization. That means the owners of the property are registered in a central database. This is the title, these are the owners. When a financial institution lends you money based on your property, they are securing their mortgage against the land title. Therefore, the lender has to be familiar with the land title system in the target country. So a Canadian bank does not know how Mexico works with its land registration system. It doesn't know how the United Kingdom works, how the USA works. Canadian lenders are going to only deal with the land title systems that they are familiar with, because if you ever default on your mortgage, they need to be able to foreclose, go through a process called foreclosure, seize the property, and retrieve it and sell it to get their money back. So that's how the lending works all around the world. Is your property is a secured asset, and they are going to use that as security for repayment. So let's look at some of your options. Let's say you want to purchase a vacation property in Mexico. So what are your choices? Number one is you can deal with a bank in Mexico. There are Mexican banks. There are also HSBC, Scotiabank also operates in Mexico. Taking those last two, while they might be familiar names, you're not dealing with the Scotiabank here in Canada. You're dealing with the Scotiabank in Mexico under Mexican laws. So you can go and talk to those folks, and they'll probably have some criteria, and they'll tell you what their interest rates are and their down payments. So I just want to give you a comparison. If somebody from the UK or the United States called me and said, "Hey Chris, I want to buy a property in Canada. I earn my income in the US or England. Can I do that?" I would say, "Yes, you can. Here are the lending rules," and I'd have some questions. I would go through what the lending rules are for foreign nationals purchasing properties in Canada. Okay, so option number two is where you own property in Canada, where you have equity, and you can access that equity. Take the equity out of your property through a refinance or this product that I'm going to describe called a readvanceable mortgage. You're going to take that cash. Now you can pay cash for that property in Mexico or wherever it is you want to buy. So in essence, you're refinancing a property here in Canada. If you don't pay your mortgage, the bank here in Canada is going to take your property here in Canada. You'll still own your property down in Mexico. So let's go through that process using a readvanceable mortgage. So what that means is, if you have a property, and I'll use some simple math, let's say it's worth $1 million, you are allowed to borrow as much as 80% of the property value, subject to your income and other debt load. So 80% of $1 million is $800,000. If you owe $400 on your property, then that means there's $400,000 cash that you can take out of your property, if that's the amount that you need, and use that to acquire your foreign property, or potentially as a down payment on your foreign property, and get a local loan for the rest. So we'll go through that as an example. So in this example, we're just, for easy math, we're going to use $1 million house. The most lending on a readvanceable mortgage that you can get on your house is 80% of the appraised value. That means you have $800,000 as a global lending limit. Now let's say you have an existing mortgage obligation of $400,000. That's going to use up half of your global lending limit. But what it does give you is $400,000 available on a line of credit that you can write a check on. So if you're down in Mexico and you see that perfect property and it meets all your requirement and checks all your boxes, you know you can actually create an offer to purchase on that property and know that you have the capacity to make that purchase. So you get back to Canada and you need to come up with that money to complete the purchase. So what you can do initially is write a check and transfer it through the legal system to make that available to the real estate lawyers in the country that you wish to purchase. So now what you see is you have a personal line of credit with a balance of $400,000 and you still have your mortgage. Now you don't really want to leave your money in a line of credit, so you actually have the option to convert that $400,000 to an amortizing loan equivalent to the mortgage that you already have. So you might decide that you want a 25-year amortizing loan and it's available at a competitive interest rate, 5-year fixed. And so what you do is you pay back your line of credit and you convert it into an amortizing mortgage. So in this case here, I'm going to swap that debt, $400,000 on my line of credit, and I'm swap that to an amortizing loan, and now I have half my mortgage for my house is $400,000, and now I have another mortgage that I'm paying for my property in Mexico. Now, if you have a property that you are collecting rental income from, and you're actually showing that rental income on your Canadian tax return, the interest on this component is, or potentially is, a tax deduction against the revenue that you're reporting. So you'd want to talk to your tax accountant about that. The final option that I always bring up when I talk to people about foreign ownership is more of an esoteric discussion, and that is, why do you want to own a property in Mexico or Greece? What is the real purpose? And people might say, well, I want lifestyle or a warm place to go. And I say to them, what if you just rent a place there? Instead, can you meet your objectives? Do you want to be dealing with foreign ownership? Do you want to be dealing with having to have people maintain the property? Have you got it figured out that when you're away back in Canada, for example, who's going to be maintaining the property? Is somebody going to be living in it? Will you be a target of thieves? There's all sorts of issues to do with to think about as it relates to foreign ownership. So here's an alternative to foreign ownership, and follow this cash flow method. Let's say that you've got $300,000 or $400,000 and you're considering buying a property in Mexico. What if you took that same $300,000 or $400,000 and bought a rental property here in Canada in your own neighborhood or nearby? Now you have an asset that you can keep an eye on, that's easy to manage for you, is earning the rate of return or appreciating in the market, that you can maintain if you have to, and every month you earn a rental income off that property. Let's say you're earning $2,000 per month on that property. If that $2,000 per month goes into an account, over the course of a year, perhaps you'll have $24,000. You can add that to income. You can use that money to go on a really nice vacation in Mexico, a really nice vacation in Costa Rica. Maybe next year you want to go on a bike ride trip to Ireland. So it creates a lot of options, whether you want to be static in one place, or maybe your thought process is, I want to travel and see a bunch of different things. So here's a way that you can make real estate provide you an income source, which you can then use to fund travel. So let's do a recap. You want to buy a property in a foreign country. Number one, you can approach banks in that jurisdiction, for example, the US or Mexico. You can approach them and say, hey, what are your criteria for lending to foreigners for property, for mortgage on property in your country? And they'll provide loans. They'll be familiar with the real estate laws and the land title system in that country. That's option number one. Option number two is you own property already with an equity position here in Canada. You can, if you have enough equity, you can refinance that property. We can show you how. Take that equity out as cash, move it to the place where you want to buy, and use that for your real estate transaction. And number three, I've just given you some ideas of, do you really need to own, there's an old saying, do you need to own the cow to have the milk? Or can you simply use real estate to fund a lifestyle? So we can show you how to do that too with a revenue property mortgage. Thanks for listening.